Welcome. Today, I am going to discuss the highest probability forex trading strategy you need to know to make money from the markets. This forex strategy works at every time frame, has a very high reward but low risk. But let me tell you, most successful forex traders trade higher time frame, that is from 4 hours and above. So this strategy works every time frame, but the high probability lies on when you master it on a higher time frame. I am guaranteeing you that once you know this strategy and trade by it, you will be among the 1% of successful forex traders. You will pull yourself away from the 99% of frustrated forex traders. That is a guarantee. It is the secret weapon of successful forex traders. So you must learn how to trade this strategy. You would like to know how I came about this forex strategy. You would like to understand the origin of this strategy. In my early days, when I started trading forex, in fact, I came to forex because I was highly indebted and I was sold that the fastest way to make money is via forex trading. So I jumped into the forex market, getting strategies from one place to another, doing all things possible to make money. Rather, I was becoming more indebted until I make a decision to get a mentor for myself. And who is that? Peter Bain. That was the founder of Forex Mentor. If you are less than 10 or 15 years into this industry, you will not know him. Then I made my research. He was on top of the chart as one of the best Forex traders and mentors. And through him, I got to reveal this strategy you are about to learn from me. Note, I don't discuss tips or tricks, or I don't promise a magic wand, a button to click to make money from the forex trading. No, I am teaching you, I'm going to reveal everything you need to know about forex strategy. Until you understand what a forex strategy is, no strategy will work for you. So in this video, we are going to discuss what is forex trading strategy, why you must have a forex trading strategy, why most strategies out there will not work for you, 3 things to consider when creating a forex trading strategy or trading a strategy, how to create one, then the highest probability forex trading and how you can trade this. This is the strategy I love most. But before we go to the strategy, let's look at these points one after the other. What is a strategy? It is your holistic approach, your comprehensive approach to the forex market. When I mean comprehensive, that means you have to consider your financial muscle, your risk tolerance, your money management, your psychology, your emotion, your broker, your external environment. All these things must be brought into a book or into a plan for you to make money. So ask yourself, what you are trading today or what you have been trading, did you put all these things into consideration? So it is a holistic approach into the market. The second thing is, why must you have a strategy? Why do footballers or football teams have strategy? Is just to win. They have strategy just to do what? Win. So you must have a strategy if you want to win in the market. If you want to consistently make money from the market. In fact, not only strategy, you have strategies. Strategy is dynamic. So you apply a strategy based on the situation, market situation. Let me buttress this fact. If you are a football fan, the strategy Man U plays against Chelsea will not be the strategy they will play against Fulham, will not be the strategy they will play against Liverpool. So strategy is dynamic. That is why I said it is not tricks or tips. No. So you must understand it as a whole. Why do most strategies that you've been using, even when it benefits the owner, does not work for you. The reason is simple. Those factors that were built into the strategy, you were not considered. Your financial muscle was not considered. Your personality, your emotion, your psychology, all these things weren't considered when that strategy was built. So that means you must have something that work for yourself, or you must learn every strategy in this format for it to work for you. What are the three things to consider when creating your strategy? The first one is your capital, your fund strength. You must consider that. The second thing you have to consider is the broker, because you are out to make money and it's only broker that interfaces between you and the market. So in creating your strategy, you get to know if it's really acceptable by the broker. Then the third one is your money management. It's all about money, money, money. When you consider these things, then you will actually build a strategy that will really work for you. How do you create strategy? Now, this is another form of saying, how do you validate your strategy? Now, there are two basic ways to do that. After you must have formed that strategies or that strategy, you backtest it, at least 5 years backtesting. Then 6 months demo trading. Once you've done this, it will give you the confidence, the courage to trade that strategy, because you've gotten the past result and the future result. So you are sure of that strategy. That is how you create strategy. Then, the last but not the least, this highest probability forex trading strategy and how to trade it. Before I reveal it to you, what is the core? What is the secret of this strategy? Simple. The momentum loss through candlestick size and formation. Yes, it's as simple as that. The loss of momentum by the buyers or the sellers in the market. And that is called bullish and bearish engulfing pattern. Trading the bullish and bearish engulfing pattern, that is just the strategy you need today to make your life meaningful via forex trading. This is exactly how it is. You trade a bullish engulfing pattern in a downward market or a bearish engulfing pattern in an upward market. I want you to understand something. I'm not talking in a downward trend or upward trend. I'm talking in a downward movement or upward movement. Don't get me confused, or don't get confused. The trend, the currency pair trends, some take 15 years, 20 years, 10 years for a trend to change. But the market makes movement up and down. So there is upward and downward movement. Then there is overall trend. In this strategy, what we are considering is the market movement. So for you to trade a bullish engulfing pattern, the market must be clearly in a downward movement. And for you to trade a bearish engulfing pattern, the market must be clearly in an upward movement. Take notes. So these are major movement reversal pattern. I've explained that. So how do you trade this? Let's look at this chart holistically. You can see this market from here is an upward movement market. Now, when it gets here, when it gets to this point, for an engulfing pattern to occur, it must be two candlesticks of opposite colors. Two candlesticks of opposite colors. So when it got here, you see that this is the first day of the engulfing pattern. But the second day, the sellers brought a candlestick that engulfed the whole of this. You may ask, why is this not an engulfing pattern? This is not, because it did not, there are some percentage of this candlestick that was not engulfed. Are you getting it? But this is a very serious candlestick formation, which we'll discuss in the other subsequent videos. So, but this, I'm talking of bearish engulfing pattern. So you see, the market is clearly up here. The market is clearly up. And when it gets here, the sellers engulf this, this is a sign that the buyers are no longer strong in the market. It's a sign that they don't have the energy to push again. The momentum has, they have lost the momentum. So the sellers has come into the market, and this is where it gets to. And now this movement, this downward movement ended here with a bullish engulfing pattern. You can see it. The bulls, these are the sellers, they brought the market to this point until the buyer bought over. This is the buyer bought it. Now the buyers bought over, they engulfed this candlestick. They engulfed it, and the market moves up. That is a simple explanation of this pattern. Please take note of this pattern because it is one of my favorites, and it occurs more frequently than other patterns in the market. Let's check another chart and see. You see, the market is completely down. At this point, this is the first day of the bullish engulfing pattern, but the buyers took over, completely engulfed this, telling you that the momentum of the sellers are no longer in the market. They don't have that power any longer, and the market moves. And when it got here, you see the buyers are moving this market. At this point, sellers came to the market and engulfed everything about this. Please take note. It must not engulf the wick or the shadow. We are talking of the body. So it engulfed the body, and it forms what? A bearish engulfing pattern. So this pattern is exactly how, when you see it in any time frame, it works. However, the highest probability of this pattern giving you much money is from 4 hours upward. Bullish engulfing pattern trading rules. Once it forms, there are things you must consider to ensure that really you can trade it. The market has to be clearly indefinable uptrend or downtrend. Yes, even if the trend is short term, but please take note, I'm talking of movement. It's an error. The market must be clearly in a definable up movement or down movement, even if it is a short one. The candlesticks comprise of engulfing patterns. Sorry, two candlesticks comprise of engulfing pattern. I've said this. Two candlesticks, it must be the actions of two opposite candlesticks. The second real body must engulf the pure real body. It need not to engulf the shadow. I hope that is clear. Excuse me. The second real body of the engulfing pattern should be the opposite color of the first real body. It must be opposite real color. It must be the buyers and the sellers. The buyers must have lost momentum and the sellers come to the market, or the sellers must have lost momentum and the buyer comes to the market. The exception of this rule is if the first real body of the engulfing pattern is so small and it is called a doji. And this makes it even more strong because doji on its own, it's an indicator of a complete exhaustion from the market. This is the candlestick stick that is called a doji, in case if you don't know. So this part of the trading rules. Other serious factors to consider. Please, you have to consider these things before you trade because that is what makes the market real for you. If the first day of the engulfing pattern has a tiny real body and the second day has a very long real body, this will reflect a dissipation of the prior trends or movement force and increase in force behind the new move. It's clear. If the first day is a complete small body, then obviously, and the second day has a run, it is completely an abandonment of the other movement to the opposite movement. If the engulfing pattern appears after a protracted or very fast move, a protracted trend increases the chance that potential buyers are already long. In this instance, there may be less of supply of new longs to keep the market moving. A fast move makes the market extended and vulnerable to profit taking. This is what this point is saying. You please take note of it. If it happens here, good. At this point, the buyers push it higher. It shows that they have power in the market. However, the second day came and engulfed it. It is a clear indication that the sellers has come to the market. Having considering this rule, if there is a heavy volume of the second real body of the engulfing pattern, yes, if the second real body has a very high volume, if it moves deep or more into the previous day on or engulfs the previous day on and move further, it is a great sign of dissipation of the other movement. If the second day engulfing pattern engulfs more than one real body, it's also a sign. But however, you must wait for the market to confirm. You must wait for the market to confirm if really this movement has started. Let me give you an example. This is exactly what happened yesterday when the market, what happened yesterday in the market. Let's go to the chart. Let me show you something. Sorry. Let's go to the market. Let's wait a bit. Let me show you exactly what happened yesterday in the market so that you understand. Now, this is it. This is Euro USD, AUD USD. The movement was up. And at this point, what happened? A bearish engulfing pattern took place. And it took place near resistance of the market. Most of weak trader or who don't understand this pattern will want to sell. No, you must wait for a confirmation candlestick, and a confirmation candlestick should be another sell. And at that point, you know that it has been confirmed. For those that don't understand this pattern very well and saw this engulfing pattern and enter the market, you see how the market went against them. So you must confirm that yes, this market has the engulfing pattern, this movement has been exhausted before you go. And one of the ways to get it is that yes, an engulfing pattern has formed, a bearish engulfing pattern. However, you should wait for another candlestick to close. Once it closes in a sell manner, then there is chance for you to move the market. So what is your trading rule? What does rule mean to the market? Now, let me tell you, no matter how good your strategy is, without a rule backing it, it can never flow. So that is exactly what we are discussing here. What is your rule? Let's go to what your rule is. Rule is what backs the strategy. It's as simple as that. So let me tell you brief of my own personal trading rule. You've seen the strategy I love trading. You've seen the strategy that makes me money. But what is the rule? My rule one is one pair at a time. The Forex trading is like a football. It's a football team. I call it football team. A football team plays one match at a time. Man U Chelsea cannot play two match at a time, even if they have 48 players. A match at a time. So as a trader, you must trade one pair at a time if you want to be successful. That is my own personal trading rule. One of it. Then the second rule is I trade one direction at a time. I'm still talking of football. If you're talking of football, when there is match between two teams, one must play from left to right and one must play from right to left. So it takes a mad person to play both sides at the same time. It can be possible. So as a trader, you must trade one direction at a time. If it is a bullish engulfing pattern, then you know you are looking for opportunity to buy. If it is a bearish engulfing pattern, all your entry point will be to sell at a particular time. That is how I trade. I trade one lot size at a time. Yes, if I'm trading $5,000 account, my lot size may be 0.5, 0.9, one lot size as the case may be. Now, if it's one lot size I'm trading, that is what I will trade. If it is 0.5, that is what I will trade all through the market. I don't change 0.5, 0.8. No, that is sign of greed, and the market will wipe your money out. So I trade only one lot size. That's a particular lot size at any given time. How do I exit the market? I take 1% of my money, of my capital. That is what I trade in the market. That is my exit point. Or when the trading pattern has been nullified. What do I mean? Let's go back to the chart. Let me show you what I mean. Let's go back to the chart. This is what I mean. And a bearish engulfing pattern has taken place here, right? I won't, if I sell at this point, because I will sell after this has formed, I will sell. Now, when I sell, I don't exit the market until the market closes above here. Let me give you an instance. This is from this chart. You can see it. If I had wanted to trade, let's assume I said, okay, an engulfing pattern has occurred here. Let me sell. And the only way I will exit this market is that you see the next day candlestick has nullified this formation. Obviously, I will go out of the market. That is my exit point. So I either make 1% of my money, or I exit the market, or I exit the market at 1%. So that is exactly how I trade. My own trading pattern. That is my own trading pattern. So when it comes to leverage, I take 1:10. That is my leverage pattern in the Forex market. In fact, my leverage is 1:1. Takes only at a special situation I take 1:10, but usually I go for 1:1. So what is the shocking truth here now? There are three things that will make you or will stop you from making money using these strategies. This strategy, yes. Three things I'm too confident that will make you not to make money, even when I've revealed this powerful forex trading strategy to you. One, the broker. The broker will make you more broke faster than you can imagine. So you must know who is your broker. Now, I don't personally recommend brokers, because when the broker that was recommended to me in my early age duped me, and it was not the fault of someone who recommended me, because he never knew. So what I do is that I tell you the brokers I've been using for 5 to 6 years now, and they have been very, very excellent. That's Exness and Octa FX. These two brokers has been my favorite for time. But how did I choose them? How do they come to be my best broker? And that is what I will teach you today. If you get to Exness, okay, the link to the broker is in my description here. So if you get there, if you use the link, get there, ask the customer service, who are your regulators? They will tell you their regulators. What is a regulatory code? They will give you the regulatory code. Go to the regulator site, put in that code and see if it is there. If it is there, then it is genuine. Then what is the speed of response? Any broker that responds less than 2 or less than 3 hours, there is problem. What is the speed of transaction? Ask them. If you deposit your money now, how soon will it reflect in your account? If you place withdrawal, how soon do you get your money? Now, these two brokers are almost instant. I use them. So if you are interested, for now, mind you, Octa FX and Octa FX and Exness are my best bet for now. Now, the second reason you may not make money from this market is lack of understanding of the clear movement of the market. Yes, you must understand the movement of the market. Then thirdly, your carelessness in following the steps. Once you stick to this, once you know this is real-time business and you prepare for it, you come out for it, you will definitely make money from it. Please, if you enjoyed this video, share, subscribe, be part of my channel so that we keep on growing in this industry full of money for only 1% of successful forex trader, and which I know you will be part of it. Thank you for watching.